So 80% win rate strategy. I'm going to show you what the strategy is, and then I'm going to show you some trades that I've taken recently. Really, really good strategy that's been getting me some incredible results, copy traded on plenty of prop firms recently, Apex, Lucid, whatever you want to do. And I'm going to show you right now. So very simply, I'm just going to show you how I do this. So if you take a look here, just on NQ, and usually what I do is I'll just go and look at the price action on like the 5 minute. Say for example, this is your price action like this. And I'll just go, let me do a bit of a better interpretation than that actually, because right now that's looking a bit choppy. So say for example, this is your price action. I'll just go down, mark these major swing lows. Really, really obvious and easy to do. Takes you like 5 seconds to do this on the charts. Go mark all the major swing lows that you've seen recently, and then I'll just set alerts at them basically, just so that I'm waiting for, I don't have to be waiting on the charts all the time. I'll just set alerts at these major swing lows. I'll be looking for one to come down and get hit like this. Usually if you take a few out in a row, that's even better and good chance of a reversal. And then very simply, I'm just looking for reversals to the upside to take trades, and then I take the trades based on fair value gaps that are inversed back to the upside. So these fair value gaps that you come down, form, and then break back to the upside after liquidity sweeps. Really, really easy way of trading, and honestly, it's been working really, really well for me recently. Usually what I'm looking for is this pattern, this candle pattern here, for example. These 3 candle pattern V shapes are really, really good. So you can see we've come down here, formed a fair value gap. Say this is your liquidity sweep. So we've come down, swept liquidity, formed a fair value gap. And then usually what you're looking for is these 3 candle pattern V shapes are the absolute best ones, although they are more rare. But if you get a pattern that looks like this with a major liquidity sweep, you're going to have a really high probability trade. And these are usually the ones that I look for the most. Although you can still have ones that do this, where they are 4 candle V shapes. These ones are almost as good and still have a really high probability of working. When you're trading for major liquidity positions, when you've swept them and then you get reversals back to the upside, you do have these really high probability scenarios where price action wants to come back and rebalance if inefficiencies above. If the theory about price action is that it's always chasing liquidity, once you've swept liquidity, if you can get an inversion back to the upside, usually it's going to go and find liquidity higher on the other side of the curve, and that's usually what I look for. So let's say for example, this is our trade. So we've swept liquidity, we've come down, fair value gap formed, we come back up, we close back above the fair value gap. So I enter the position here. I risk about $150, $200 per trade, copy traded across a lot of accounts. So I'll size for about halfway between the low and the gap. And then if we come down like this over the next few candles and close back below, I'll know that my trade was wrong, and I'll close when we close back below the gap like this. But if the trade is successful, then this is what I do. I'll wait for it to hit a 1-for-1, and I'll take half my position off here at around $75, $100 of profit if I'm risking $150, $200, and then I'll set my stop loss to break even on the rest. So I've secured some profit, and then I'll still have a few runners back to the upside, where basically I'll be looking to target liquidity and inefficiencies that are higher. And then when I get to like a 2-to-1 or a 3-to-1, I'll think about trading my stop or just closing some of the position depending on how the chart looks. And this is basically my model. It's pretty simple, and I think it makes a lot of sense when you think about liquidity. Once you sweep liquidity, you want to target liquidity on the other side of the curve. That's really, really obvious. And usually when you sweep these major lows, the Nasdaq really does like to get those reversals back towards liquidity that's on the other side. So say for example here, you've got your inversion. We've swept major liquidity. We've got our inverted fair value gap. We inverse the price. We inverse the gap here. This is what your price looks like. And then very simply, enter on the inversion. I'm sized halfway between the gap and the low. And then I'm looking for price to go up to target the liquidity on the other side of the curve. So say for example, we hit my 1-for-1 here. I take half my position off, stop loss to break even. And I've got some really obvious areas to target here. You can see these swing highs. These are areas where you're most likely going to see price go to. So say for example, this could be your next TP, this could be your next TP, and you could leave a runner if you're really bullish on the day. Obviously 2.5 to 1 risk to reward there would be pretty good. I'd probably make about $300, $400 on this trade If I scaled half here at about 100 and then scale the next half at 2.5 to 1, I'm looking at around $250, $300 probably, leaving a final runner to continue upwards. But this is my model basically. I think this works really, really well for me. It's really simple, and as I said, I don't have to worry about being on the charts all the time. I'll just wait for, basically put alerts like you can see here for all the major swing lows. So these are all the alerts that I've got on NQ for today, if you were wondering. I've got an alert of 50% because we pumped in New York here, so really I'd like a retrace to 50% if I was going to start considering longs again. But as you can see, pretty much all the rest of my alerts are at these major swing lows. These are just obvious swing lows on the 5 minute. You don't have to make this super complicated. As you can see, these are just really, really obvious swing lows that you could trade from. And usually when you come down and sweep these major lows like this, you will get good reactions to the upside. And I'm going to show you a few examples. So, price action over the past few days has been pretty wild because of all the Greenland stuff that's been going on. But you can see here we've had some pretty incredible, crazy swings in the market. I can't remember actually taking a trade yesterday, if I'm being honest. I don't think there was anything really that good. I do occasionally take some less ideal setups that aren't from major liquidity sweeps if they are 3-pattern candle V-shapes. Like, for example, I think this one on Wednesday was quite good. Wednesday was yesterday. This AM session trade here was quite good because we had the SMT with ES, which means that basically, is this going to swap to that part of the chart? No, it's not. I knew it. I really hate how the charts work on TradingView sometimes. But an SMT with ES means that basically ES has come down and taken its low, but NQ hasn't. But it can mean that you can get a smart reversal from there without the sweep. And you can see this was a 4 candle pattern V shape, if I can get my words out, which would have worked. As you can see, I didn't take this personally, I missed it, but you can see that this would have worked. Because you could count this, ES took its low, so that you could count this as a sweep. This is obviously a bit more advanced. But generally speaking, we've already swept liquidity here, and then we come down again, and then ES took its low, and we got a really bullish reaction. And then you could see this would have worked if you'd have taken this. You could have taken 1 for 1, and then you could have gone all the way to almost a 3 to 1 here. This would have been a trade that would have worked quite nicely. But obviously, I didn't take that personally. And trading this week has been a bit weird. There hasn't really been anything. Price action's been a bit strange. There was a trade on Monday which was really, really solid. This is a really good textbook one. So as you can see, we've come down here. We've swept out loads of major lows to the left on Monday. We start to accumulate here. And then we come down, we sweep again down through another major low. And then we get this perfect V shape back to the upside. This is what you're looking for every single time. You can see here this is really, really good. Obvious accumulation, manipulation, and then distribution. This 5 minute inverse here, you can see we've clearly come back up, closed above the fair value gap. I actually entered this a little bit early because I was in off the 30-second down here, but I don't have the 30-second time frame on TradingView at the minute, so I actually got in a little bit early down here. So I was already in down here, and then it averaged in this area when I saw the 5 minute was going to close above. So my average entry was somewhere down here for this one. But let's just say, for example, it was here. You could see this would have worked for a 1 for 1 and then got stop break even. I personally didn't get stop break even because my average entry was actually much lower because I entered down here on the 30-second as well. So in reality, we ended up in a scenario where basically we came up here for me, we came back down, but I actually took profit more in the region of here, trailed one of my stop losses, and then basically just trailed the other one up into this area here for around a 2 to 1 overall. So made about $200, $300 on this trade. Really, really obvious textbook V shape that you want to be looking for. There was another 5 minute V shape on Friday. If you look here, you can see major liquidity levels being swept to the left. Looking at the 5 minute here, you can see really obvious fair value gap formed after sweeping those lows. We come down, sweep, and then you can see again, this is another 4 candle pattern V shape, but still really, really strong. Massive momentum back to the upside, really, really good. After being so far down, when you dump this much, you are going to expect a retracement at some point, and you can see this is quite clearly a very, very good trade. We've come up here. Obviously, I could probably took this with 2 micros, I think. So I would have taken one off here for around $100 or so. And then I think I trailed my stop loss on the second one up to around 2 to 1. So I made about $200 or $300 on this trade as well, because I wasn't expecting a huge move back to the upside after such a big dump. You can see we tapped 50% here. So I was thinking we could well get a pullback from that area if we don't just blast through 50%. As you can see, we didn't, but this was again a trade that you could have taken that would have worked. 5-minute trades do work really, really well in general, because they obviously have more time to form. They've got more price data in them because they have more candles within them from the 1 minute, 2 minute and 3 minute, and they do tend to work really, really well. You can see here there wasn't that much else. There was this interesting trade here. There was a few trades in this area that I took last week as well, which I'll finish on. So as we can see, we open up, we sweep through tons of liquidity. Look at all this liquidity here. We swept through 2 or 3 or 4 major lows there, and I'm thinking, okay, we're definitely going to get ourselves a reversal. This was on the 3 minute. You can see this is a really obvious fair value gap, a really obvious reversal. Good momentum back to the upside. Enter on the close above. As you can see, this one just went for a 1-for-1, but I only managed to take this with 1 micro because of the sheer size of the stop loss. The stop loss here looking like 30-40 points. So I took about a 1R on this for about $150. And then really interestingly, later on when I came back to the charts, because I was a little bit busy during this period, we came back, we formed this really obvious accumulation here. I mean, this is the most obvious accumulation you'll ever see. A really tight range, chopping up and down, and then we come down, as you can see, we sweep the low. Really obvious. And then we get this really, really obvious V shape back to the upside here, as you can see. Again, this one was took a little bit longer to form. This is like 5 or 6 candles, but still would have worked. And then you can see here, again, I could only take this with 1 micro. So I took this for 1R pretty much for another $150 for that day. And then I was done. Really, really good strategy. Absolutely cooks for me and has been cooking for a while. And I'm looking forward to scaling more accounts. I've got about 25 accounts right now, 20 Apex accounts and some Lucid accounts and some other firms. Looking to scale more accounts with this strategy. I've been having an absolute blast trading it. Is there anything happening right now actually? There is actually potentially a trade here. Obviously this is not a major liquidity sweep, but you can see even now as I'm speaking there are trades forming all the time. This is a bit of a janky one. I probably wouldn't have taken this because this top wick is too very, very bearish in my opinion. But you can see we did get a liquidity sweep here. We are bouncing out of some gaps to the left here, and we are super bullish, as you can see. Obviously too high, way too high up for me to be taking a long, because I want to be taking longs down here, not all the way up here. But you can see this would have actually worked amazingly. There's your 1-for-1. So I could have taken this, you know, with 2 or 3 micros because the stop loss is so tiny. Halfway between the low and the high. Halfway between the low and the gap, I should say. We hit the 1-for-1 straight away. I'll take half my position off here. Go break even on the rest, and then this is essentially a free trade. And then we would have seen whether or not, who knows whether or not this would come down, break even me, or go back up. But by the looks of things, judging by this huge wick, I would have to hazard a guess we might start reversing here for a cooling off period. And this looks like it's going to get stop, rest, break even. We're going down. We're going to come break even me. To be fair, we might sweep this low and then bounce. But as you can see, this would have worked here as well. So this works pretty much in a lot of scenarios. And I do sometimes take trades where there was a really good example of this, if I can just remember where it is. There are examples where I will take these three candle pattern V shape trades when we don't get a major sweep. Is this it here? There was a really, I'm just trying to remember when it is. There was a really decent trade over the past few weeks, and I'm just trying to remember when it was. It might be before this even. Is it in this area here? I'm never going to be able to find it. But anyway, you get the idea. At this point, you can take these liquidity sweep inverses and they work a hell of a lot of the time. This was a really good trade as well. Look at this massive dip to the downside. Accumulation, manipulation, distribution. Inverse here. Targeting above. Just really, really good. Here it is. I found it. This is a trade that I thought was good as well. Just to end on this. Look at this 3 pattern candle V shape. Really, really good. Really, really good momentum. As you can see, we're obviously like grinding to the upside on the day, so we're kind of bullish so far. We get these minor sweeps of liquidity to the left here, but look at this reaction. This is an incredible bullish reaction on the 5 minute. I definitely took this, and as you can see, look at this candle here, and absolutely no top wick at all, just showing how bullish we were going into this candle. It gave me a lot of conviction that this was going to go up. I took this with 2 micros, risking about $150. As you can see, we came down and retested the gap but never closed below, so I didn't close. And then we came up, hit the 1-for-1, took half my position off here for $100, and then I trailed my stop loss once we got up to around a 2-to-1. I think I got about a 3-to-1 on this trade, and I wanted to close before open because I didn't want to risk the profit. And there we go, absolutely smashed it. So if you do want more information about this strategy, guys, you can get it down below. Like and subscribe. Like and subscribe, leave a comment down below, let me know your thoughts. Check back every day for daily updates, and if you do want to get alerts and signals, you can get them in the description below. More information about the strategy, join the community, and I'll catch you in the next video. Cheers.